Today I'm going to show you the #1 trading strategy. This is all you need. It is a simple pattern that you can follow. You do not need daily bias. You don't need to know the trend. All you need to identify is this simple pattern and you can be profitable. Now, I did not create this pattern. It was discovered by Stoic Trader. This pattern is how the price moves, how the market moves, whatever it is, whether it's stocks, cryptos, bonds, futures, forex, whatever it is that you're trading, price moves in this pattern. And once you see it, you will see it everywhere on the chart. So let's go ahead and take a look at the pattern itself. So this right here is the SBS pattern, which is the swing breakout sequence as coined by the creator Stoic Trader. So let's go ahead and dive into it and see how you're going to identify this pattern. Now, like I mentioned before, you do not need to know the trend. You do not need to know the direction or where the price is going. The simple thing you need to see or identify is a break of a high. Let's say if we're looking at a bullish structure, which is right here in front of us, we're going to look for a break of a previous high. And for bearish, it's going to be the same, just in the opposite direction. But let's take a look at the bullish example over here. So the first thing we're going to look for is a break of a high for a bullish example. So we have this high put in over here. Let's mark that out. So we have this high that was broken. Price went up, pulled back, and broke above the high. Once price has broken above this high, now we're going to wait for the price to retrace back into or below this level. So the same level that we marked, which price broke, which is the previous high, we're going to wait for the price to retrace back into that level. So this high that the price created after breaking this previous high is going to be our first step in the sequence, which is #1. So we're going to mark it as 1. And this 1 is only confirmed when the price retraces back below this level. So the confirmation for #1 is the price going below the previous high. So once price is below this level, we're going to wait for it to go back up and take out the recent high that it put in, which is #1. So we're going to wait for price to take out 1, which it does over here. So as soon as price goes above or touches this level, this low that it put in is confirmed as #2. So let's mark that out over here. This is our second step in the sequence. The price retraces under and shoots back up. As soon as it takes out #1 over here, this low is confirmed as 2. So now we have #1 and 2 in the sequence. The next step is #3, which is gonna be the next high that price creates above #1 over here. So price goes up, keeps going up and starts retracing back. And we wait for the price to take out #2. So now we're looking at #2 over here and we're waiting for price to go below this level. So price does that over here. As soon as it goes below this level, this high is confirmed as #3, which is the next step in the SBS sequence. So #3 is confirmed as soon as price goes below #2. So if you're following, #1 is confirmed once price breaks above the previous high, and #2 is confirmed once price breaks above the #1. So whatever this high is on 1, price breaks above, we have confirmation of #2, and then once price breaks below #2, this level, we have confirmation of 3. So now that we have these 3 levels, we're looking for the entry. So the entry is going to be #4. So what we're looking for is for price to reverse from somewhere below #2 right here. So price can start reversing right here as soon as it goes below the number 2, or it can keep going down further and then reverse. Either way, we're looking for price to now move back up, and you can do that by using market structure, by going down to a lower time frame and looking for a break above the previous high, or you can do what Stoic Trader does, which is use a double bottom and use the high of the double bottom to enter. So let's say you're looking at this pattern on the 5-minute chart. We're going to go down to the 1-minute chart, and you're going to look for a double bottom to form around here. Now, the way Stoic explains is he uses this low as a 4 and then 5, but I feel like that complicates things because you don't always get that. So just keep it simple and use this low or this area as number 4. So let's say price creates this double bottom right here. So we know we're below number 2, and the next move the price is going to make is to go back up to this area around number 3. What we're looking for is the move from over here up into about this area below the number 3 level. So around this area, somewhere around here, is where we're going to take profits. So now on the 1-minute chart, you see this pattern forming. Let's say you're in the process of this double bottom. So how do you enter? You're going to go ahead and put your buy stop over here. This is the level that we're going to be buying at. The stop loss is going to go right here under the double bottom, and the price targets is going to be somewhere around here. So you don't want to put your target up to where the number 3 is, because you might not always hit your target. So we're going to move it back further down around here somewhere, and that could be your take profit. But what I also like to do is to take partials along the way. So we're going to set a partial at, let's say, 50% right here, and then you can target higher prices or even up here, and take another partial up here and move your stop loss to break even right here, and then see if you can catch a runner. So that is the SBS strategy. It is super easy. Once you figure this out, once you identify this pattern, you will see it everywhere, because this is how the markets move. Every chart is going to show you this pattern. So let's go ahead and take a look at some real life examples on the charts. Over here on Bitcoin, we have the 5-minute chart. Price creates a high, creates a low, breaks this previous high, and comes back under. So we have a pattern starting to form over here. We're going to mark out this high. Let's zoom in a little bit. So you can see this candle. Price goes above this level and comes back down and closes right here. So on the lower time frame, we're going to have the number 1 and number 2 in this area. So let's go into the 1-minute chart and take a look at what it looks like on the 1-minute chart. Let's see. Here it is. So we had this level marked in, which was this previous high. And we can see right here, price goes above this level, giving us number 1 as it comes back down below this level. So that we're going to mark this number 1, the first step in the sequence. For the second step, we wait for the price to come back into this level, which it does right here, and then we wait for it to break the previous high, which is now this level. So it does that with this big bullish candle. So once it goes above, we have the last low, which is right here. That is our number 2. Let's mark that over here. Now for number 3, if you remember, we're going to wait again for the price to break number 2. So we have the price going up, comes back down, and over here is where it goes below our number 2, giving us the confirmation that this previous high is now confirmed as number 3. This is our number 3, and we know this is the area that we're targeting. So if you remember, we're looking for a double bottom, and we have that right here. So price breaks under this level, retraces back and starts going back under. It does not create a double bottom over here, but it does over here. As we could see, we have this candle and this one. So on a lower time frame, like on a 15-second, you would see the double bottom forming over here. So once we see that, that is our number 4, which we see over here. So once we do that, we can put our entry on the high of the double bottom. Stop loss goes under, and our target is somewhere around this area. And as you can see, that price goes straight into target, and we get close to almost a 3-to-1 risk reward on this trade. So the risk reward is going to be different for every pattern. It can be up to you if you want to take that, if it's a lower risk reward. Like sometimes it might be more of a 1-to-1 or 1-to-1.5. As long as it is at least 1-to-1.5, I would take that trade, but I leave it up to you what you want to do in those situations. You can wait for the next SBS pattern to form, but the best way to find out what works best for you is to backtest this and find this pattern over and over. Get used to identifying this pattern, and then you'll see it everywhere, and you'll see which one works better than others, which one is going to be worth taking, and which one will give you the best risk reward. So let's take a look at this bearish SBS example on EURUSD. We're on the 1-minute chart, and we have price going high, retracing back, creating a new high, and then it breaks the previous low. So we're going to mark out this low right here using this line. So once price breaks below and then goes back up, we have our number 1 as marked right here. And then we're going to wait for price to take out the number 1 level, which it does right here, which gives us the confirmation that this high is our number 2. And then we wait for price to take out number 2. So price goes down, 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 creates this low and starts moving back up. And then as soon as it takes out this level, which is our number 2, which it does over here, we get our confirmation that this low is our number 3. And then we're looking for a double bottom or double top in this case to form, which it does over here. You could see with these 2 candles, it forms the double top. And once it does that, we have our entry over here. Stop loss goes right above the double top, and our target is going to be before the level 3. So I'm going to set my target over here. So I like to set it around the swing before the low or the high. So in this case, I want to have this area as my target area. So that would be my trade, and it gives you a 3-to-1, a little over 3-to-1 risk reward. But you can see, even though it retraces back, it goes below and goes lower. So if you took partials on this trade and you moved your stop loss to break even and you had a runner, you could get even more profits as the price continues to move down. So that is one of the bearish examples. Let's take a look at another one. So now we're on gold. Let's take a look at another example here. We have a bullish SBS pattern right here. If you see if you can identify it. If not, don't worry about it. You're going to get used to it the more you back test. Let's go ahead and mark things out since we're learning. We have this high that was taken out right here. So we're going to mark that high out. And then price goes above, comes back down. As soon as it comes back down, we have our number 1 right here. Now we're waiting for price to take out number 1. So this is our number 1 level at 2,387, and that level is taken over here by this candle. So as soon as it does that, we look back and find the lowest low, and the low is over here. Mark that out as number 2. Now the next step is to wait for the price to take out the number 2 level to create our number 3. So price, after taking out number 1, goes sideways for a bit and then goes down, taking out number 2, giving us the number 3 level. So as soon as it takes out this number 2 over here, we're going to look back and find the highest high, and that is our number 3. So we have this as the highest high. That is our number 3. And then we are now just waiting for our entry. We're looking for double bottoms. So we have it forming over here. We have this double bottom. We have price coming down, goes up, comes down again, tries to go below, fails, turns back around. And once it starts doing that, you can set your buy stop over here. So we're going to go ahead and set our buy stop over here. Stop loss goes below the wick. And then target is going to be around here. So this is a smaller risk to reward, but I would still take it because it's above 1 to 1.5. So you can see you enter right here. Price goes above, comes back down, a little bit of a drawdown, goes back up, almost hits the target, and then starts reversing back. And here you might be like, oh no, we're going to get taken out. And you might, sometimes you will get taken out. But that is why taking partials is also helpful. If you could have taken partial here and then another partial here, then moved your stop loss, you would still have profits and you would get stopped out over here. But let's say you didn't do that. You let the price run its course. So price comes down, goes back up. And if you notice over here, we have the way price moves, we have another SBS pattern right here. See if you can identify. We have this high that is taken by this structure over here. Price creates number 1. We go above, create number 1, comes back down, confirms number 1, goes back above number 1. This is number 2. Let's mark it out, make it easier. So we have our number 1 over here. Let's get rid of this. This is the high that we're looking at. So we have this high, price goes down, takes this high. Now we wait for price to come back down, which it does, gives us number 1. Now we're waiting for price to go back up and take out number 1, which it does with this candle. We look back, mark our number 2, which is going to be the lowest low for the bullish SBS structure. Now we wait for price to reverse and take out number 2. So price goes all the way up here, comes back down, takes out number 2. So after it takes out number 2, we're looking for number 3, which is over here. And this number 3 is only confirmed once price takes number 2. So once it goes above, so once it goes below this level right here, we know this is our target. And if you were in the original trade, this is even more of a confirmation that it's going to work out. So we have our double bottom forming here, and price goes back up to the number 3 area. So you can see this is how the price moves. You find this pattern everywhere. You just have to train your eyes to identify this pattern. And once you do, you will not be able to unsee it. For me personally, this strategy has been incredibly lucrative. Super easy to spot. Once you find it, you see it everywhere. That's what makes it easy, because once you see this pattern forming, you're like, okay, I know what I'm looking for. I know where the price is going to go for these next few moves. So it makes it super easy. And that's why this is the number 1 trading strategy. You don't need any indicators. You don't need to worry about time frames. None of that. Pure price action. Just look for this pattern, and that is all you need. Now go into your charts and start back testing.